Good day, everyone. Welcome to today's live stream. Remember, guys, hit that subscribe button, hit that notification bell, hit the like button, help out the video. Right now, we're waiting for the EA to detect a setup so that we can go long or we can go short. We're just waiting patiently for the EA to bring in a setup. So far, the market has been very slow around 8:30 to 9 and 9:30 to 10. So this is one of those periods where we are not getting that type of volatility and momentum that we would usually get at 8:30 to 9 and 9:30 to 10. So we're just going to ride it out until volatility and momentum starts coming back to those time slots. So this is basically me going through how the EA would perform live so that you guys can see for yourself if it's successful or if it's not successful. Okay. So we're looking at 3 to 4 years. Okay. So I'm not bringing an EA to you guys that's going to promise you to get rich quick. This is something that you can use $1,000 on, and you can flip that into $1 million in approximately 3 to 4 years. Okay. Completely automated. If I wanted, I could take profit myself at certain points, but that's not what the intention is. So I could make the EA a lot more profitable by micromanaging it, but that's not what my intention is. My intention is to simply allow the EA to work on its own. Okay? It doesn't matter if it's winning for a certain period of time or if it's losing for a certain period of time. It's just to let it work by itself. Okay, so guys, remember, hit that subscribe button, hit that notification bell, like the video, support the channel. It will be very educational for you guys in the long run. I see we have Pratt with us. Welcome back, Pratt. I did get your email as well, Pratt. I got your email. Okay, so we have not been triggered into a trade yet. We will be triggered into a trade hopefully soon. How are you doing today, Pratt? Pratt says he was literally waiting for my live stream. Thank you so much, Pratt. I appreciate it. As soon as my tools are ready, Pratt, I will let you know. I'm not doing mentorships right now. I do provide mentorships for other companies, but I'm not doing any mentorships of my own right now. But when I do start, I will let you know. I will let everyone know. But don't be afraid. I will help you out. I like persons that have a passion for trading. So once you have a passion for trading, I will always help you out in any way I can. So it's very slow right now, and what I'm looking for, okay, let me bring on my Epic pen. I like to, okay, Pratt says if I can guide him how he can start. Okay, Pratt, okay, we've just been entered into a sell, then we got entered into a buy. All right, so what I'm expecting from the price, 1 second. Let me just bring up my Epic pen. What I'm expecting from the price is something like this, right? See this? And start moving to the downside. That's what I'm looking for, okay? So Pratt, what gave me the ability to forecast price is the Elliott wave theory, okay? Now, when it comes to the Elliott wave theory, a lot of us get it mixed up where we think to ourselves that we can actually use it to trade, as in it does help you a lot, but you can't necessarily use it as gospel because the market makers manipulate the waves so much, especially in the third wave. It is heavily manipulated, and that's normally the wave that most traders trade. That's why that's the wave that's manipulated, right? So when it comes to retail trading strategies, you have to be very careful with them. Okay, so you can apply the Elliott wave theory on top of something else, something institutional, right? Like, for example, my liquidity map system, you can apply the Elliott wave theory kind of on top of that, okay? Because that's going to guide you as to where the price is going. It's my liquidity map is stronger than the Elliott wave theory. But the Elliott wave theory will help you to understand how the price action could be constructed. Okay? So use the Elliott wave theory more for looking for corrections in the market. So you're looking for things that look like this. You're looking for things that look like that. Things that look like this. Right? If the price is coming down. This one if the price is going up. Or if it's coming down, same thing. You're looking for things that look like this. Right? So it could be like price could have been going up and it does that. You're looking for things that look like, let's say price came down to this. Right? So looking for things that look like that as well. So this is just an example of some of the price patterns that you might see in the market. You're also looking for things that look like this. If price is moving up, it pulls back, it pushes up, it pushes down. You're going to look for price to continue moving up like that. Okay. One second. Can I draw this one a little off? Right? So that's more like a regular flat formation. And then if price is moving up and it does this and it does this and it does this and then it goes like this, this would be considered a expanded flat formation. And then there's this one where price is moving up and it does this. Let's say it breaks the high, doesn't break the low, then it goes up. This is a running flat formation. So these corrective formations. These are the things that you really need to look out for in the market. And these are the things that are going to be very, very manipulated in the market, right? So you apply trend line on top of them, right? The trend line that you apply helps a great deal. So what you would look for is if that trend line breaks, right? Because if the price is moving up and you're able to draw a trend line like this, and the price is supposed to go up, like from here, it's supposed to go up. If it does not, if it starts going up, fails, come back, break the trend line, then you know that it's manipulated. It's most likely going to come to the downside, right? Same with this. If this is, the price is coming down and you're expecting this to come to the downside like this, right? And it starts to come down like that and it stops, then it's saying, and it pulls back, breaks that high, it's saying that price is most likely going back to the upside. It's manipulated. So that was the trap. right? To suck sellers in and then flush them out. Okay? So you got to be careful with situations like that. Because most likely you're going to have, if it's a downtrend, you may have a trend line coming like this, right? So if it comes back, breaks the trend line, you know that it's not going down, it's going in the opposite direction. So you need to be able to implement, trade management techniques that are going to help you to manage your trades. So entering a setup is just half of the battle. Managing your trades is where the real work begins. So look at what's happening here. See how the price is building? See that? So what are you going to expect? That, right? See this? 1, 2, and then you got this move up here. See that? Like that. See? So this is expected to come down if you're looking at it like you got the price pushing down, and then you got 1, 2, 3 like that. You're expecting it to go down, but it could also just continue going sideways for a while. Okay, so these are things that you have to be aware of, because after 3, you're going to expect it to come down. But after 3, the market makers could bring it down, and this could become X. Right? So they give you 1, 2, 3, X. And then they may go 1, 2, 3, X. 1, 2, 3, X. Right? So that way, when they make X, that's where everyone is trying to sell. So everyone is trying to sell on that third wave down. So 1, 2, 3, that's a complete corrective formation. Everyone is getting ready to sell when price gets to around this high. Right? So you can see the red bars are coming in. Let me just remove that. You can see the red bars are coming in, right? Because everyone is looking to sell when the price gets back to the high. Let me bring on this. You see that? It gets back to the high. You can see red bars start to form. People are trying to sell this, okay? So the market makers know that people are trying to sell from that level, okay? So if too many people start selling from that level, this is just going to come, maybe it comes down a little bit more just to keep inducing the selling, right? It starts coming down, keeps inducing the selling. Maybe it gets to this level, back to the low, and then it goes back to the high. May even break the high a little bit, then keep dancing around, right? Or if there are not too many sellers because there were a lot of buyers in the market, the price could just drop. So it all depends on how many orders are in the market. If there is a lot of retail selling going on, more than retail buying, they're going to go down. Sorry, they're going to go up. If there is more retail selling, they're not going to go down, they're going to go up, right? Then you need to keep in mind the trend. Let me just try to, show you what I'm talking about. All right, so this is the main trend, right? So price is above that main trend. And this is the minor trend that price is in, right? So you see this trend line that you're looking at? Let me just make this big again. You see this trend line that you're looking at? As much as sellers are looking to push the price down, this trend line is propping the price up. So if you don't understand trend lines, then you're against yourself as well. Because you could be looking at the chart pattern, right? But the trend line needs to be broken. If the trend line is not broken, then the pattern could evolve into something else. You could get stopped out. See that? It starts to come down, it goes up because too many sellers in the market. So you can see clearly how that wave was manipulated, right? Clear manipulation. You can see that. So you keep with the trend. You stay long because the trend is up. So you stay long instead of trying to sell to complete this move down, to catch this big move that you're expecting to the downside. Instead of trying to sell into that, you just stay with the trend. Wait for it to come back, break that high. When it breaks that high, you buy it and you stay with the trend, right? You try to move your stop into break even as soon as you can and you stay with the trend. Okay? Because the price could still come down, because this is just because we have too many sellers in the market. So what they're looking to do is to liquidate the sellers, right? So all stops that were above this level would have been taken out here, right? If they break this high, then they could still come back, but most likely they'll continue moving up a little bit more, right? If they break or match this high, it means that they could continue coming to the upside. But if they're able to liquidate the sellers, they could still drop, like just break the high, drop. So all they did was try to grab liquidity in that area, right? And now they're coming back to the downside. So maybe there isn't much sellers, or maybe they're just inducing more sellers, right? So we need to watch, because what would tell us to enter this trade, to go short, is the break of the trend line. Understand? So you understand the chart pattern, yes, but you need to also draw your trend lines and draw them properly, because inside of a trend, there are still other trends. There are minor trends inside of a main trend, right? So you need to understand where you are in the market. The trend lines help you to understand the wave that you're in. It also helps you to see the manipulation, right? So that red bar that you saw coming down, that was another inducement for selling. So they induced more sellers to come into the market, right? So what the market makers are going to do, they're going to bring the price up to their level where there is a lot of liquidity, right? And the way how the market makers designed price action, they designed price action so that stops would be placed in a certain area, right? So most stops will be placed in a certain area. And once those stops are placed in those areas, they will just, like clockwork, just move the price to those areas back and forth, right? So that's what the liquidity map does. It shows you the areas where liquidity is going to be in the market. Right now, we are at an area where liquidity is in the market. So this is why the EA is designed the way in which it is. It doesn't have a bias. It basically goes where the price goes. So wherever the price chooses to go, the EA will be right there with it. If this price chooses to fall right now, the EA will close out the buy and take the sell. We're almost at the high. Now, this is the potential pattern that can happen at the high, okay? Price comes down here, and we get this 1, 2, 3, like that. We come back, and then we go up again, right? That is potentially what we can see. Then there is also this possibility, right? Because the market makers like to be tricky. They could simply say this is... See this? Like that triangle wedge type formation? They could simply say that is what this formation is going to be. Now, this is still something that helps to manipulate you, right? So this pattern itself is a manipulation in the market, right? Because this pattern could make you think, for those who like to trade wedges and triangles, it could make you think that the price is going to continue moving all the way up. But then there is another pattern here that comes in around that level, which is supposed to push the price at least back down to this low. But then remember that it doesn't have to reach that low. They can manipulate this wave by making it longer and then bring it back up. They can manipulate that wave by making it short like this and bringing the price back up. They could also manipulate this wave to the upside, make it break the high, then bring it back in, then bring it up. So many different variations exist in the market. But if you understand the Elliott wave theory, you will understand what the possibilities can be, right? So the more corrective patterns you understand, the better it is for you when it comes to the market, because you could assume what these manipulative moves can be, how they're going to evolve these corrective formations, so that you can now take action at the right time. Now, when you incorporate the liquidity map with whatever you're looking at on your chart, it helps you a lot, because you know that once you're in this area and you see a certain thing happen, you know that potentially I'm getting possibly this type of move or that type of move, right? So right now, you see price starts to pull down. Why do you think price is pulling down? See that? Let's bring this. See that? See? Simple. Easy. Now, this wave that's coming down is the wave that normally would be manipulated, right? So guys, remember, hit that subscribe button, hit that notification bell, like the video, support the channel. I'm going to try my best to make it as educational as possible for you guys. So now, what we're looking for now is price to come down, maybe back to this level, right? My drawings are not perfect, guys, okay? My hands are not surgeon precision, precise. All right, so price starts to come down. We can come to this level approximately. Remember, we could also break this level and go back to the upside, okay? The price could also break this level and then come back to the downside before it goes up. So all of that is possibilities. Let's watch and see what's happening. So this was already an inducement for sellers, right? Pulling sellers back into the market. Because everyone's looking at who wants to look at support and resistance. This level here is going to be resistance, right? Because it's a high. Some of us look at support and resistance in that way. It's a high, so when price comes back to that high, you'll expect to get a reaction. Price bounces off the high, you get that red bar. Everyone is thinking sell, 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 right? Not that it's wrong to think sell. It is wrong to consider selling. Sorry, it is right to consider selling, but it will be wrong to sell, right? You could get lucky and it could go down, right? And go down all the way. You could get lucky and that could happen, because that is also a possibility, right? However, what you want to wait for is for the price to break the trend line. If it breaks the trend line and you see that this was an equal high and it comes down and breaks the trend line, you know, okay, it could come down, break the trend line, and it could go back up because it's a false break. That is a trap for sellers, right? It could become a trap for sellers. So that's a possibility. So you got to keep that in mind, right? Because you understand the corrective formations that can potentially unfold in the market, right? So if that unfolds, you get the break, you're not going to sell right away because it broke the trend line. You need to be able to understand the pattern that came before the break of the trend line, right? So sometimes we trade, we forget to consider these things, right? So when the price breaks the trend line, you could look for something that looks like this, another corrective formation, right? And then you trend that. Now this is what's telling you what's going to happen next, right? So if price comes and breaks that corrective formation, then you sell. Yeah? So you got to understand what you're looking at and what comes before what, right? So you got to understand what comes before what. The market makers are very, very manipulative. So you got to be very careful. You got to trade with precision. You got to try your best to trade with precision. Now, all of us are looking for the best entry. And they know that too, that we're looking for the best entry. Sometimes they break down and they come very far, right? So you're thinking, okay, they're going to go down, and then you start selling, and then the price just goes back to the upside. It doesn't make the pattern invalid, which is an expanded flat pattern, right? So expanded flat pattern will do this, this, this. Sorry, this would be a running flat pattern because it didn't break the high, right? So it can come, break the low, go back up. That is a possibility. So you will need to see, if it comes down, you need to see this corrective type move, at least 1, 2, 3, and then break down, right? At least 1, 2, 3, and then break down. But it could do more than that. It could break down and give you 1, 2, 3, X, 1, 2, 3, X, 1, 2, 3, X, right? 1, 2, 3, break down. It could do all of that. All of that is a possibility. So trend it, look for the break. So you guys can see how the price is moving. It's manipulation. Right now it kind of looks like it wants to go back up. This little bounce that you're seeing here, this is off where the trend line originally was. Right, so originally the trend line was like that. See? See the wicks? See more manipulation? They cracked the trend line, inducing selling, right? So everyone's trying to sell, and they gradually bring it back to the upside, right? So they induced sellers so that they could stop them out up here, and maybe even potentially come back and break that high to stop them out as well. So you can see here how they're respecting the same trend line, right? Now, when the high is broken, or when the price comes to an equal high, what I do is I bring my trend line down to the wicks, right? To the end of the wicks, like that. That gives me more of an accurate projection for trend, right? I always keep my trend line on the wicks, and maybe even a little bit off the wick, because I know that they can always try to give me that false break to try to induce me to sell. So they manipulate even the trend lines. They even manipulate the trend lines with the false breaks, right? But there is really no such thing as a false break. It's just pattern formation. The pattern formation will create what looks like a false break, but it all depends on how much knowledge you have to be able to understand what exactly is happening, right? So there is something in the market called, well, in price action from the Elliott wave theory, called a truncated wave, right? So right now we have price completed 1, 1, 2, 3, right? And then we're expecting this wave down to come, okay? Now we did not break the high, so this wave down could end up becoming long, right? They started moving the price back to the upside. So this move up, if the price comes and breaks that low, it could mean that the move up is complete, right? And this is a truncated wave, meaning a short wave, right? So if the price comes down, breaks that low, then we could look at it pretty much the same as this, and then break down, right? So let's see what's going to happen here. This is the manipulation. This is where if they break the low, then this is what might be considered a manipulative move, where they induced buyers by creating a pattern that the buyers understand, a pattern that they see, a pattern that they recognize. Don't forget the trend line, guys. Price needs to break the trend line. This time slot only has about, let's see, a few seconds left in it, less than a minute. Okay, so we broke that low. So this tells me that potentially price may want to continue moving down, right? Now, since price is moving down, you still need to be careful because the manipulation could get real, right? So let me delete everything here. I'll try to draw it with my Epic pen. You see this, guys? This is one wave. Okay, so we're done. It's closed. We didn't really make any profit. The price didn't really go anywhere, right? So this is the situations where you could, with the EA, you could find yourself break even. You could find yourself in a small loss. You could find yourself in a small profit. This is when the market's not going anywhere. They're just in correction, in consolidation, right? So with this wave coming down, the price, this is 1, this is 2, this is, it could even do something like this. This, one more down, still push that up because it would still be like this, right? So they could manipulate this price in so many different ways that would blow your mind, right? So it's always wise to look for, just look for price to break down, look for that sideways move, and then trend it, look for the breakdown. Okay? All right, guys. So thank you very much for watching. I'll be back at 9:30 with the next segment. I'll see you guys then. Remember, guys, subscribe, hit the notification bell, like the video. I'll be back with you guys. Thank you so much. Bye-bye for now. Hit the subscribe button, guys. Hit the notification bell. I'll be back at 9:30 with the next segment. Bye-bye.